So the budget 2025 is just few weeks away, and experts warn that Rachel Reeves could slash your 268k tax-free pension lump sum, your salary sacrifice, or may even slash your 20k ISA allowance. For years, this has been the backbone of us, the working Brits' retirement plans. But the government facing a massive cash crunch, they are now prime targets. And these potential changes could quietly wipe thousands of pounds from your future retirement pot. So nothing is sad, but today I'll break down what's being discussed and more importantly, what you can do right now to stay one step ahead. So the point number one is salary sacrifice under threat. So the first point is salary sacrifice, and it is on the Treasury's whiteboard. Okay, and this is by far one of the biggest quiet tax benefit for millions of UK workers. So how this works? So in a nutshell, what happens is you agree to a lower salary and your employer pays the difference directly into your pension as an employer contribution. Okay, so crucially, neither you or your employer pays NIC, and that is National Insurance Contribution, on that sacrificed portion. So this is one of the massive tax breaks. So now government is seriously thinking on this, and they've run some numbers as well. So they are planning to remove the NIC exemption entirely. That could be one thought. And the second thought is they want to remove this exemption, but only above a certain threshold, perhaps 2,000 to 3,000 or 2,000 to 5,000 pounds of the sacrifice salary per taxable year. So by doing so, they are basically targeting higher earners. Okay, so this is one of the biggest one which no one is talking about. So if this happens, then it will be a big problem. Okay, and now let's look at the impact. What could be the impact if this happens? So the impact could be majority of those who are trying to save those tax rebate through that sort of not a loophole, but I would say a trick. Then this will be reduced. So by doing so, they'll pay higher NICs as well as higher pensions, okay, as well as higher taxes. That's what government wants to do. Now, point number two is the 268k tax-free lump sum. So when we talk about those rumors, then government is planning two things. Okay, one thing is at the moment, see, the lifetime allowance is 268,275 pounds. Okay, so you can withdraw that sort of portion. Okay, so they want to reduce the percentage of that. So at the moment it's 25%. So they are thinking to do it slightly lower, 20% or 15%. That is on the table, as well as they would want to have a fixed lump sum amount. So just no, you cannot withdraw more than 100,000 pounds in between so and so years. So that is also they are considering. So that is a big take. So what would be the impact on those? So let's discuss those. Imagine if someone would want to withdraw their own cash. Okay, so why are they not allowing? And that is a big thing. So sometimes sudden expenses happens. Let's say, for example, if someone wants to pay off the mortgage completely and just want to get rid of those debts. Okay, so that is a very good money that you could utilize. Okay, so that's why people are not happy at the moment, and this is a big talking point in the pension community. So the point number three is stocks and shares ISAs. So the final point is stocks and shares ISA, individual savings accounts, also known as ISA. Okay, and with its generous 20,000 annual tax-free limit, people are utilizing this a lot. So they are basically doing there are 2-3 rumors circulating around this topic, and that is they would want to reduce the limit first. So they would want to cap to just 10,000 pounds, and also they're considering that 10,000 pounds you can invest in American companies through ETFs or in whatever means. But if you want to invest more than 10,000 pounds, then you need to invest into a UK specific companies, and then we can give you 5,000 in the form of probably British ISA or similar kind of thing. That's what they are considering. Now the second point is they would want to cap the cash ISA limit. Okay, and at the moment up to £20,000 you can put in either like a cash ISA, stocks and shares ISA, innovative finance ISA, or lifetime ISA. Okay, and you have that separate limit for junior ISA, which is £9,000. Okay, so that is not the topic which we are talking about. Okay, so cash ISA they would want to limit up to £4,000, and that is on the table. Okay, it is one of the rumors. Okay, and the another rumor which they are thinking is like for any stocks and shares ISA, they would want to limit a cap, such as like similar styles such as what we have in India, that you cannot withdraw your money before 2 years, something like that. It's called short-term capital gain tax and long-term capital gain taxes. So similar thing which they are considering into these stocks and shares ISA as well. And by doing so, people will have to pay hefty penalties, and by having that, government will generate extra cash. This is what they are thinking. Now, when we talk about the impact on the stocks and shares ISA or any forms of ISA, then it will be a huge impact, because majority of savers or investors, they use stocks and shares ISA and this kind of like tax-free advantage accounts to get the best benefit out of it. Now, please let me know in the comment below that what are your thoughts, okay, about these Rachel Reeves' new plans on 268,000 tax-free lump sum for the pensions, okay, or any salary sacrifice changes, or any changes to your existing ISA allowance, okay, which is £20,000 right now, by the way. So this is from me, and my take on this is doing nothing. Okay, so I'm not going to do anything, not changes, because these changes will be applicable in the next year. Okay, so why should we worry that what's going to happen next? Okay, so these are just rumors. Okay, and please take it as rumors only. So this is just like few rumors which is going on, and based on that we still have got plenty of time up to 5th 6th of April. So by that time we can do any other changes, and this will come in two phases as well. So they are not hard and fast like they will do it overnight. Few tax changes which they could do it, but most of them will be applicable in the new year. So that's all from my end. So see you in the next video.